Matthew now joins us. Let's talk about markets, liquidity, what's happening in the world, and why are markets forgetting the most important aspect, which is the four-letter word, risk. Mark, fantastic to have you back. Thank you for joining us. Mark, I literally rubbed my eyes in the morning, watched them again, rubbed them again when I read that Apple is only $150 billion away from becoming a $2 trillion company. That means Apple today is going to be as much as the size of India's GDP.
Well, I agree. It's a big number. And there are, I think, 3 other companies in the world that are valued in excess of $1 trillion. So they're called the TerraCaps. And I think you're right. If you extrapolate the returns on these mega caps, let's say 3, 4, 5 years forward, they'll add up to being larger than the entire rest of the market, which is, I suppose it's theoretically possible, but it would certainly be very strange to have 4 companies worth more than the entire other 496 stocks in the S&P 500. So you would think that eventually their outperformance would change, but at least now there's no reason for that to happen because they're still coming through with extremely good results. They have cash on their balance sheets. They're benefiting from the coronavirus. In fact, many of these companies, I think, are really emerging market plays because the growth is so strong in emerging markets. So I remember when Google surpassed Indonesia in value back in 2000 and I want to say it was 2006. And at the time thinking that just doesn't make any sense because Indonesia is a big country, 250 million people. And Google's just a search engine, but boy, was I wrong. So I'm giving you a long-winded answer, and I don't have a conclusion, but at least for now, we think the FANGs are going to continue to outperform.
Missed out, Mark, and there is a large number who's missed out because IMF was bearish, economists were not certain, companies themselves were slightly uncertain. What should they do? Because it's a very annoying, frustrating, and a nasty feeling when you see markets go higher and when your money is parked in banks which are not giving any returns.
Yes, I agree. Well, once again, you might have gauged from my long-winded and sort of generally inconclusive answer to your first question that I don't really have a good answer for the second question either, because it would seem impossible that these FANGs could continue to outperform at the pace that they have over the last 5 to 10 years. I guess you mentioned banks. What I would say there is that it is difficult to see a better day for them, given that the NPAs worldwide will surely pick up as a result of coronavirus, and interest rates are going to stay low, which is not good for them, and they face a lot of disintermediation from competitors offering digital services, big companies like in China, Ant Financial. And I don't really have a good answer, but I do think that the market basically over time goes up just because good things happen and the economy grows and we invent good things. And so I would basically just say remain invested has been a good way to make money, as simple as it sounds, buy and hold.
Sure. Mark, it seems like Reliance could very well be the FANG for India. I mean, the way the Reliance industry stock has moved off late, single-handedly doing the trick for the Nifty. Do you believe there is long-term value in Reliance? Although, it's not really an apple-to-apple comparison when I say, could it be the FANG for India, because it's got retail, it's got telecom. But it's really turning out to be that, holding company, which is a platform business. That's how people are looking at it now.
Right. I would just sort of agree with everything you said. I think it is becoming the FANG of India. But at least apart from the FANGs in America, you have literally hundreds of other companies that are also interesting so-called new economy plays. And in India, apart from Reliance, there's probably less than a dozen. So it has even more exclusivity in that sense. And I think the fact that these major American technology companies like Facebook and Amazon and their private equity companies like Silver Lake and KKR have taken a stake in it is really telling you that it does have value, maybe not in the traditional net asset value discounted cash flow sense, but Amazon 10 years ago didn't have any value in the traditional sense either. And look what its share price has done over that period of time. I do think that Reliance, yes, will grow a lot more. And essentially, India, the internet will be growing in the high double digits over the next 5 years, at least, probably 10 years. So in other words, somewhere between 15 to 20% growth in the internet and its related businesses in India. And so therefore, Reliance is a good proxy on that because, as you rightly pointed out, it has the distribution channel through its enormous customer bases in telecoms and in retail. So I do think it is going to continue to go up, basically.
Yeah, absolutely. That can be said selectively about private banks as well, Mark. And, one is wondering that most of these private banks in India and the top rung, along with the smaller ones, they're all going in for large fundraisers. There are two ways of looking at it. A, why not? Because, right now is that lean period. You will need those funds eventually. So why not, keep the bazooka ready whenever you may need to fire that. But at the other hand, Street is also somewhat worried as to why is it that this contingency fund is being prepared? I mean, what is it that the banks see coming in with regards to the moratorium, non-performing assets, or the state of the economy, which is bound to hit these banks as well? So why is it that they're raising funds right now? Why, what are they so scared about? How is it that you're going to read into this move by banks to raise funds at this point?
It could be opportunistic. It could also be that they are seeing the need to prepare for larger provisions. And I did note the RBI's financial stability report is looking for an increase in NPAs this year from, I think, 8.5 to about 14.7%. That's a very meaningful increase. And the coronavirus, it's very clear it's no longer just a problem in Bombay and Delhi. It's spreading to the rural areas. So that's going to push down rural consumption. And I guess between the two, being opportunistic and raising capital at a cheap price to lend more, or raising capital to prepare for larger non-performing assets, I would guess that it would just make sense that it's more for the latter, because it does look like the economy is starting to slow down again. Now the coronavirus is spreading out beyond the urban areas.
Okay, Mark, what about precious metals? What about gold, given that we're continuing to see a weakening dollar, watching out for further stimulus, longer term recovery is really what's being factored in. How much further and as an attractive asset class, how much more interest do you see building up in gold?
I think the path is up. And by the way, this rise in gold is very good for India because certainly one of the greatest stores of value in Indian households is gold. So this is a good thing for the country that the gold price is going up. And I think it should continue to, because the Americans are going to come out with another big stimulus package. I'm quite sure of that. The Europeans have just done an enormous one. Essentially, in countries where they can, governments are borrowing unprecedentedly large amounts of money. And so there are two things that are consequent from that. The first is that in order to pay off that debt, they're going to have to keep interest rates very low. And that means their currencies will be less attractive. And the second thing is when you're bogged down with debt, you have to pay it off. So you can't invest or spend as much in the future in research and development and infrastructure and things like that. So then you have the political risk of, did you see that the port in Beirut blew up last night, and the Saudis say they're going to develop nuclear weapons. The Middle East is looking bad as usual, and the relationship between the U.S. and China. I notice the health Secretary of Health in America is on his way to Taiwan, the most important American official to visit Taiwan in 40 years. So then there's all that geopolitical risk that helps gold too. So I think the whole precious metals complex, it's basically in what Alan Greenspan used to call a Goldilocks scenario right now.
Okay. You know, I also want to come back to something that you touched upon earlier, saying that there has to be a wider market to choose from. And we have continued to see that polarization and that concentration in those select few names, financials, Reliance, so forth. Do you see the market here in India getting a little lopsided, given that we are anyway seeing the disconnect between the economic data coming in and the kind of rally that we continue to see on certain names? Or do you start to see that difference perhaps diluting?
I don't see it diluting immediately, but I do believe over the next 5 years, it's just intuitive that smart entrepreneurs will seize the opportunity to be part of this growth in the internet in India. Probably will be mostly young people. So, you know, the Nifty itself, I believe the composition of it will change dramatically over the next 5 years to have more new economy kind of technology companies. It just makes sense. That's where people should be investing, and so it'll happen. But so far, you know, it hasn't. Put it that way, which is what gives Reliance its exclusivity, as I said. But I believe it will happen, and I believe it is the number one thing that is interesting in India is the internet. So there are kind of ancillary plays on it, like in a strange way, SBI Cards is a play on the internet because it's about online payments, and so there's a lot of things that might not immediately strike you as being internet related plays, but they really are, and I think they'll continue to grow and grow, and it'll be a very interesting story in India.
That's a good one, Mark. What else are you finding, you know, that could be an emerging trend? You know, are you continuing to look at consumption, or are you looking perhaps at some of the smaller pockets that are starting to look very attractive, you know, even within pharma, from the mid caps or chemicals? You know, what else is looking good to you?
So the honest answer is that I don't have that expertise. I apologize. And I would defer to my colleagues who operate and are onshore in India to answer the question. I don't have the ability to answer that question, actually.
Sorry to put you on the spot, but I like how you highlighted SBI Cards and the logic, you know, behind that and how you see it playing out. On a more broader spectrum, then, when it comes to the financials here in India, are you seeing any kind of risks at all? Are you continuing to look positively at the opportunity for further growth when it comes to the financials? Because, of course, everyone's overweight, but we have seen a huge spate of fundraising taking place across the financials as well.
So clearly there's a bifurcation between the public banks and the private banks, and that I don't really see changing. Of course, SBI had good results earlier this week, but to me it looked like a one-off because they took a big gain due to the reduction of their shareholding in their life insurance company. But to me, the one sector that stands to get hurt the most from the coronavirus, not just in India, but around the world, is banks. Number one, because there will be a lot of casualties in the small and medium-sized enterprises as a result of the coronavirus and its effect on the economy. But number two, governments have taken on so much debt that they will oblige central banks to keep interest rates low. And so I don't really like banks, actually. And that's a problem in many markets because they're a large part of markets. They are. In India, I think they're over 30% of the stock market there.
Well, Mark Matthews, appreciate your time, and always fantastic to have you back on ET Now.